Well, let's take a look at Carvana. In the meantime here, Carvana shares are driving higher this morning as it tells investors it expects to reach positive adjusted earnings next quarter. Shares of the used car company are down over 80% over the past 52 weeks. However, if you took a look at the year to date, the bounce back that we've seen, okay, this is the past year, down by about 77%. But year to date, we've been tracking Carvana as well, because last year they took an L, but this year they bounced back, maybe? We'll see.
I wish that there had been a camera on me while I just looked up short interest in this company, because I did sort of a double take. 51% of float.
Jeez.
Which is extraordinarily high.
Yeah.
This has got to be a short squeeze that's going on here today, at least exacerbated. Like, this company still has issues, right? It still has a lot of debt here. Cash and debt positions at the company. Cash balance, $488 million as of March 31st. Total debt and leases up to $8.7 billion. That's where they stood as of March 31st. This is a company that is not necessarily out of the woods in terms of its debt positioning. Yeah. These comments notwithstanding. And so, this is one of those that we've seen in recent days, put it in the category maybe of a Bed Bath & Beyond. Not that I'm saying that this company is going to go under, but what I'm saying is that you have maybe a meme effect where people seize on what seems like a, marginally positive headline, and then you see just that short squeeze really help the stock take off. Yeah,
that has been the parameters that we can continue to look back to, or at least draw a thread through some of the meme stocks that had taken off or gone to the moon at some point and ultimately came back. But when you think about, for Carvana, the story that they're going to have to tell or sell to investors as well, this was a good first quarter for them. In fact, it was their best first quarter in company history. Retail units sold 79,240 there and revenue of $2.606 billion. And particularly as I think back to some of the car economy, if you will, the car market, I should say, rather, and what we've heard from the retailers of cars and vehicles to those who are in mobility, like a Lyft that we were listening to, and their earnings, and then even a Ford, who we spoke with, their CFO earlier this week. There's kind of this differentiation that all of them are trying to put forward at this point in time in order to best position the company for where on the economic front consumers are either pushing back on buying a vehicle by taking more trips, as we heard with Uber, or where they're even in those trips looking for the prices of those trips to come down, while at the same time waiting for the prices of vehicles, for used vehicles that in some cases are costing as much as new vehicles to still come down as well there. So, all of that kind of encapsulated, that's, I guess, where I'm going to spend my weekend, is just going back and listening to what all of the different car or mobility companies are saying right now about the economy.
I mean, it's interesting what analysts are saying about Carvana in particular, that Piper Sandler's Alexander Potter said it's coming back from the brink. And there's some other analyst chatter here that things are getting better. Ron Josie over at Citi saying that the company has significantly improved unit profitability by right-sizing its inventory. So, I shouldn't poo-poo the positive reaction too much. It's just the magnitude of it obviously is, got to be short squeeze, at least in some capacity, short covering.
Yeah, no poo on that parade, just balls and strikes. That's what we're calling here.